Hey traders, it's Jeffrey from Ninjacators. Today I'm going to cover a very important concept that you should be considering every day that you trade, and that's market sentiment, and particularly NASDAQ market sentiment. So, what do we mean when we say market sentiment? It's actually the feeling of investors toward a particular instrument or the broader market segment of the financial markets. Sentiment can dramatically influence stock price. For example, think about Twitter, now X, and the Elon Musk takeover. Bad press and other factors fueled poor market sentiment, and it drove the stock price way down to almost half of the $54 a share he paid, and it's just now slowly rebounding. In addition, the broader market sentiment is also dramatically influenced by the media. News outlets, social media, when they release articles or posts about a company, it can lead to a surge or a fall in that company's stock price. Remember the GameStop short squeeze a couple years ago? That entire event was triggered on Reddit. On one of their discussion boards, it absolutely drove the stock into a short selling frenzy. Now, mainstream economic indicators like the US inflation rate or the CPI, the PPI, GDP, they are equally as important. And so is company news. For example, 4 times a year, all public companies have to release their earnings. When the big companies, like the banks, high-tech manufacturers, airlines, services, consumer goods, and so on, when they do well and they release positive earnings, it lifts the market. It lifts the indexes. When they do poorly, it can drive prices down of the individual stocks and the indexes also. So we pay special attention to positive or negative earnings of all of these companies, and that way we can get a bias for our daily trading and establish market sentiment. Now, when there are few or no news releases or economic indicators on any given day to gauge market sentiment, it can be difficult to determine bias. But fortunately, there are a few other indicators and reports that we can turn to give us an edge in our daily trading. The first one that many of you have heard of is a commonly used market sentiment indicator called the VIX, or the volatility index. And that's especially useful for the S&P and even the Dow. Let me show you exactly what it looks like. You can Google this just like I did here, okay? The CBOE has an actual index called the VIX, and here you can see the close today. The result was 15.34. It is frequently referred to as the fear index. The VIX, as I said, is an actual CBOE index, and it's based on S&P options, and it correlates to volatility in the S&P index. When the VIX is over 20 to 30, investors are bearish. There's a high level of anxiety, uncertainty, risk, and fear in the S&P, and prices are driven down. On the flip side, when the VIX is below 20 like it is here, the market is considered stable, less volatile. Investors are bullish, just as we see the markets really driving prices up and up and up. We're in a nice big bull run. Now, some other market sentiment indicators are also the options put-call ratio, the advanced decline line, and the ratio of new highs to new lows. These are all worth spending some time studying as they provide actionable information about the market's direction and future moves. Now, like the VIX, one of the most useful indicators is another specialized CME index, and this one's for the NASDAQ, okay? And it's called the pre-market indicator, and it's got a symbol QMI. Let me show it to you. There we go. So you can see I got this right off of NASDAQ.com, okay? Just type in QMI in the search box, and this index at 9:30 this morning was 17,419. Now here's what that means. As you know, okay, NASDAQ is an index of 100 tech company stock prices, and we trade futures on that index as a whole. That's the NQ. Starting back in the 90s, NASDAQ actually began to allow actual pre-market trading of the individual stocks, and that starts at 4 a.m. Eastern right up to the open at 9:30. So what this QMI, or the pre-market indicator, is, it tells us about the trades just before the market opens. It is calculated based on the last sale of any of the NASDAQ or anything in the NASDAQ 100 securities during those pre-market hours, and it's calculated from 8:15 a.m. to 9:30 a.m. So it's an early indication of the direction of the NASDAQ index open. It's one of my secret weapons to get a bias reading on the NQ right at the market open. Because if the index is down by, let's say, 50 to 100 points from where the NQ is, then I'm leaning into the direction of the difference. Okay? Like I said, you can find this real-time index right on the NASDAQ website. You just go to NASDAQ.com, type in QMI in the search box, and it'll pull it right up, okay? Check it for a few days, okay? You can even find it on investing.com and type in NQ-pre-market and see it come up there. So here's an example. Today, 9:30 at the open, the pre-market index was 17,419. So what happened at the very same time at the open? Okay? The NASDAQ itself was higher. It was 494, okay? 17,494 right at 9:30, okay? The pre-market index is predicting that we're going to get an open down move. And sure enough, what happened? Right down to 467 by 9:45, okay? You cannot follow this through the day. It's giving you an early indication of what's going to happen. So there were some useful market sentiment indicators and concepts for you, okay? That's it, traders. Study market sentiment. Take some time to learn these indicators, these concepts, the reports, the news events to follow, so that you too can get a bias on your day and be a more profitable trader. Good trading, and we'll see you in the next one.